Hello everyone, hope you all are good and I hope that you have studied all the previous lectures properly. As you all know, we have started with fourth chapter from part 1, that is journal, and so far we have completed illustration 1, 2, 3 and I think we have completed up till illustration 6 if I'm not wrong. And also we have completed several sums from exercise. Yes, I think the last topic that we have understood in the last lecture was the transactions through bank. Illustration 6 and yes, illustration 7 also is completed in last lecture. And on the basis of same, we have started a sum of similar kind from exercise. And we have done only one transaction from that sum. It is sum number in your exercise, sum number 7 again on page number 103 in your textbook. Illustration 7 we have done, and on the basis of illustration 7 we have started sum number 7 in last lecture on it is given on page number 103, and I have explained only first transaction from that. And in today's lecture we are going to continue with sum number 7, as I said, which is given on page number 103. Then we are going to understand the concept of trade discount and cash discount. You already know the meaning of these words, the cash discount and trade discount. We have understood this in chapter 1, but we have understood only theoretical concept, as first chapter was completely based on theory. In this chapter we are going to practically apply this in the transactions. Yes? And thereafter we are going to start with illustration 8, which is given on page number 74. So here is the question. This is given on page number 103 in your textbook. Question 7, as I said, these are all the transactions for loan and interest. We have done illustration 7, which is about the same concept. It is transactions of loan and interest. So no doubt I have explained one transaction, but we are going to start from the beginning again. Write the following transactions in the journal of Pushkar. So Pushkar is the owner. You will draw a format of journal, and I'm extremely sorry for the inconvenience that we are going through a lecture in this way on the basis of a presentation that has been prepared because of some unavoidable circumstances. Yes, few lectures we are going to continue this way, and then everything will be back to normal. Yes, so firstly, you'll prepare the format of journal, which is date, particulars, LF, debit and credit. You know the specimen of journal very well. From the very beginning of this chapter, from the first illustration itself, we have understood about the preparation of format of journal. In this format, you are going to write down the journal entries. Yes? Okay, starting with the first one, 2014, February 1st. Due to additional requirement of funds, 12% loan of 20,000 borrowed from Ram. See, fund is required in the business and hence a loan is borrowed from Ram. So firstly, think about the two effects. What comes in the business? Cash. But that is not your own cash. It is the borrowed money. And what is borrowed money? Borrowed money is always a liability. Now loan. Loan is which type of liability is it? It is non-current liability. This we have understood in chapter 1. Yes. So the two effects for this are cash account and loan of Ram. These are the two effects. Now let us decide what is to be debited and what is to be credited. Cash comes in. Cash, real account, debit, what comes in. Loan is a liability and liability is always having a credit balance. So obviously the loan of Ram or Ram's loan account will be credited. So your journal entry will be cash account debit to Ram's loan account. You can also write 12% Ram's loan account with respective amount 20,000 in debit and 20,000 in credit. If you are having your writing book with you right now, you can write the journal entries along with me. Otherwise, you can also watch this lecture on repeat mode and you can write down the journal entries. The choice is yours. Moving towards the second journal entry on 3rd of Feb, Rupees 8,000 lent to Lakshman at interest rate of 8%. First of all, try to understand the meaning of this transaction. What do they say? They say that the amount is lent to Lakshman. That means here the loan is given. In first transaction, loan is taken from Ram. Here the amount is lent to Lakshman. That means the amount is given to Lakshman as a loan. Yes, so obviously cash goes out. Credit what goes out. 8,000 lent to Lakshman. Who's the receiver? Lakshman is the receiver. Yes. So the journal entry for this is loan advanced account debit. This is loan given. Whenever you borrow a loan, it is having credit balance, and whenever you give a loan, it is debited. Why? See, liability is having credit balance because you are supposed to pay. Asset is having a debit balance because the amount of loan will be returned to you by the person to whom you have given loan. So loan advanced means loan given. To whom? To Lakshman. So the journal entry for this is loan advanced account debit to cash account because cash goes out. Then transaction on 8th of February. Received cash rupees 800 for loan lent to Bharat and 200 for interest. Understand the meaning of this transaction firstly. They say that cash is received for loan lent to Bharat. That means a loan was given to Bharat and from that 800 rupees is received. And rupees 200 is also received for interest. Yes. So the journal entry for this is firstly cash comes in. Yes. Cash account debit 1,000 to Bharat's loan account 800 to loan interest account rupees 200. Why interest is credited here? Because interest is an income. Cash is received. Yes. Firstly, understand the meaning of this transaction, what they are trying to say. They say cash is received, 800 and 200 for interest. So first of all, cash account debit what comes in. How much cash comes in? 800 plus 200, 1,000. 2. What is to be credited? Bharat's loan account. Now this is which loan? The loan that was given to Bharat. Yes. So whenever you give someone a loan, it is debited, loan advanced. But whenever the amount is received back for the loan given to that person, then the reverse effect for this is to be given. Yes. So this is loan given to Bharat and from which 800 is received back. Hence, it is credited to Bharat's loan account. That means Bharat has given 800 rupees. Bharat is giver. You can also apply that logic. And 200 rupees is separately credited for interest because credit all incomes and gains as per the rule of nominal account. We have studied types of accounts, rules of accounts, and obviously you know the reason why interest account is credited. Okay, the next transaction, rupees 5,000 returned back to Sita for borrowed loan and paid interest rupees 400. Now this transaction is completely opposite to the previous transaction. They say that the amount is returned back to Sita. That means we have taken loan. We is Pushkar, I mean. I have said that you consider yourself as the owner. So I am Pushkar and I have returned back 5,000 to Sita for borrowed loan. I might have borrowed a loan and now I am returning her. And I have also given interest rupees 400. Yes. So in this case, cash goes out. How much cash goes out? 5,000 plus 400, that is 5,400. And the amount 5,000 is given for loan. And who's the receiver? Sita. Sita is receiving her amount of loan. So Sita's loan account debit 5,000. Loan interest account debit, because interest is my expense, rupees 400, and overall total cash that goes out of my business is rupees 5,400. Alright. Next, the next transaction says received interest rupees 200 for loan lent to Kaushal. Loan was given to Mr. Kaushal and Mr. Kaushal has given an interest of rupees 200. To whom? To us, to Pushkar. So cash comes in, cash account debit to interest account or to loan interest account. Rupees 200 is received by us. Who has given? Kaushal. Interest is an income and all the incomes are to be credited as per the rule of nominal account. Yes? And of course, cash comes in. Received interest. This clearly says that the transaction is cash transaction. And in the case of cash transaction, out of the two effects, one effect is always of cash. Hence, cash account debit to loan interest account. Interest is an income and hence loan interest account has been credited here. So the next transaction says interest for 1 month paid for loan obtained from Ram. Now here is the reverse case to the previous journal entry. Previous journal entry says that we have received an interest. For what? For the loan that was given to Kaushal by us. So we have received interest and interest is our income. Here, now the current transaction I am talking about, we have paid interest on loan. For what? For the loan that was taken from Ram. So here interest is our expense. So loan interest account debit to cash account. Cash goes out. Of course, if you pay cash, cash goes out. Credit what goes out. Yes? And interest paid becomes our expense. So loan interest account debit all expenses and losses to cash account. Cash goes out. Real account, credit what goes out. Now, interest for 1 month, they've said. Loan that is taken from Ram, 20,000. What is 12% of 20,000? It is 2,400. Yes, whenever you obtain percentage, yes, during this sums in accountancy, the amount is always of 12 months. So 20,000, 12%, 2,400, and interest is paid for 1 month. 2,400 if it is for 12 months, then obviously for 1 month it is 200 rupees. So how much interest is paid to Ram? 200 rupees. Alright. Next, and the last transaction of this sum, rupees 75 became receivable for interest on loan of Lakshman. Now this is somewhat different compared to all the transactions. They say that you are supposed to take 75 rupees from Lakshman as interest on loan. They don't say that Lakshman has already given or we have received. No. You are supposed to receive. See, it is clearly written, it becomes receivable. 75 became receivable. From whom? From Lakshman. So, Lakshman is my debtor. Yes, from Lakshman I have to take 75 rupees. So, Lakshman account debit, debtors are always debited. And 75 rupees is my income. I have to take 75 rupees for loan interest. So, Lakshman account debit to loan interest account. Interest I'll receive, so it is my income. And credit all incomes and gains. Yes. So, here we complete sum number 7 from exercise, which was related to illustration 7 that we have done in previous lecture. And now we are going to start with a new topic, that is of trade discount, cash discount and allowance. Simply speaking, trade discount is calculated but not recorded in the books of accounts. Cash discount is calculated after calculating trade discount and it is to be shown in the books of accounts. And allowance is also a type of discount, but it is the smaller amount compared to discount. Yes? So if you'll read this in detail, you'll get to know. And right now we are going to start. See, you also have a topic of cash discount given to you in your textbook. And you obviously know why discount is given. Yes, for quick collection of money, for attracting customers. Yes, etc. etc. And lastly, it is allowance. Yes, this is what it is, a very nominal account. Nominal amount. Suppose if you are supposed to receive say 205 rupees from someone, then you might say that yes, it's okay if you'll pay 200. And the same applies to your side even. That if you are supposed to pay rupees 515 to someone, see here the example is given. And instead of that, that person will allow you to pay 500 rupees. So this minor difference of amount is said to be allowance. Yes, it is identical to cash discount. Yeah. So this we'll understand in the sum that we are going to do right now. Yes. Okay. Sum is, illustration, of course. We're going to start with illustration 8, which is related to the concept of trade discount and cash discount. Yeah. Illustration 8 we are going to start. If you all are having a new book, then 4th chapter journal, illustration 8 is given on page number 74. And if you are having old book, then you need to find out illustration 8 and chapter 3 is journal in old book. Okay, so starting with illustration 8, they say record the following transactions in the journal of Mahendra Sanghvi. Yes, the question is presented on your screen. And if you are ready with the format of journal, you can write down the journal entries along with me. Otherwise, the journal entries are also given in your textbook. Just because this is an illustration, the solution is given along. Yes? So let me read the first transaction. Goods of rupees 10,000 purchased at 10% trade discount from Taruna traders. Understand what is happening. Goods are purchased. The very first thing is, whenever you purchase goods, purchase account is to be debited. Purchase account, real account, goods account, you've purchased goods, of course, yes. So purchase account, real account, debit what comes in, goods comes in, and hence purchase account, debit. We are not talking about the amount right now. I'm just explaining the journal entry. You can even see the journal entry that is given in your textbook if you are having it right now while you watch this lecture. Yes? Now, if you have observed, this is a credit transaction. So in credit transaction, always out of the two effects, one effect is of it is the name of the party. Yes, and from whom you have purchased? You've purchased from Taruna Traders. So purchase account debit to Taruna Traders account. Taruna Traders is giver. Personal account, debit the receiver, credit the giver. Yes? So this way Taruna Traders account will be credited. I repeat the journal entry. Purchase account debit to Taruna Traders account. If we are talking about the amount, what is 10% of 10,000? 1,000. And this is trade discount. So 10,000 minus 1,000. What is the net amount? 9,000 rupees. So the amount that you are going to write in the column of debit as well as credit is going to be 9,000. Rupees 1,000 trade discount calculated is not to be shown in the books of accounts. Yes, this you'll get to know once you'll read the theory concepts given in your textbook. Yes, then the next transaction, goods of rupees 7,000 sold to Gandhi Brothers on cash at 5% trade discount. Firstly, this is a cash transaction. So out of the two effects, one is of cash. Other effect is already very clear. Goods of rupees 7,000 sold. That means sales account. Sales account is always credited because goods goes out. And of course, it is a cash transaction. So cash comes in. So cash account debit. Debit what comes in. Of course, if you are selling goods, then you are going to receive cash. You are not selling it for free. So cash account debit to sales account. Because this is cash transaction, it is clearly written that goods have been sold to Gandhi Brothers on cash. Yes? Fine. If we are talking about amount, again, 5% of 7,000. Yes, what it is? 3,500. Yes? So 7,000. Sorry for inconvenience. I'll repeat. So yes, we were talking about trade discount. 5% of 7,000. It is 350 rupees and not 3,500. By mistake, I just said 3,500 because I was considering the amount as 70,000. Yes. So 5% for 7,000 is 350 rupees. So what is the net amount of goods? It is obviously 6,650. 7,000 minus 350. 350 is 5% for 7,000. So we are clear with the amount. And further, the next journal entry, goods of rupees 12,000 purchased from Mangal Das at 10% trade discount and 5% cash discount. Payment is made in cash. So firstly, this is cash transaction. Goods have been purchased. So if you have purchased goods, you will receive discount. And if you are selling goods, you will be giving discount. And trade discount is only to be calculated but is not to be shown in books. Cash discount is calculated after calculating trade discount and is also recorded in books. So firstly, let us understand the journal entry. Purchase account debit. Yes, because you have purchased goods. And you have received discount, that is your income, and you have paid cash. So purchase account debit to cash account, cash goes out, to discount account because discount is your income. Now talking about amount, 12,000, 10%, 1,200. 10% for 12,000 is 1,200. So 12,000 minus 1,200 gives you 10,800. Yes? And now on 10,800 you are going to calculate 5% cash discount. That is 540 rupees. Yes, and that discount you have received. So you have paid cash only 10,260 instead of 10,800. You have purchased goods of rupees 10,800. Yes, and you were supposed to give 10,800. But on that you have received 5% discount, 540 rupees. So cash that you have paid is only of 10,260. Right? Next. Goods of rupees 11,000 sold to Viral at 10% trade discount and 5% cash discount. Payment is received in cash. Now this is the reverse case to the previous journal entry. Here goods have been sold to Viral at 10% trade discount. Firstly, 11,000 10% is 1100. Yes? So what is the net amount? It is 9,900. Now you will calculate cash discount on this. So 9,900. What is 5% for that? 495. Now here goods have been sold. Yes. So payment is received in cash. That means this is cash transaction. Cash transaction. How much cash comes in? You see in your journal entry, which is given on page number 75 in your textbook. Cash account debit 9,405. Discount account debit. Why discount has been debited? Because discount is given by you. You are selling goods. That time you are giving discount, and discount given is your expense, and expenses are to be debited. And this is 5% of 9,900. And 9,900 is the amount of sales obtained after calculating 10% trade discount on 11,000 rupees. Alright? Okay, so we are done with this journal entry. Let us see which is the next one. Yes, 12th. Goods of rupees 8,000 purchased from Bihari Brothers at 10% trade discount. So first of all, let us be clear. 8,000 10% is 800. So the net amount is 7,200. We are clear with this. And 10% cash discount. Paid half the amount immediately by cash. Yes? Okay. Firstly, goods have been purchased. So purchase account debit. Which amount you are going to write? You are going to write down the amount after calculation of trade discount always. 10% of 8,000 is 800. The net amount is 7,200 rupees. You have purchased goods of rupees 7,200. You have paid half of the amount. So half of 7,200 is what? It is 3,600. But on that payment, you are going to receive discount of 10%. 10% cash discount it is written. If you have paid half amount, then you will be getting discount on that half amount only. Yes? Remaining half you will be getting whenever you will make the remaining payment. Yes. So, 3,600 is the half of 7,200. On that, you will be getting 10% cash discount. That means you will have to pay only 3,240. So, check your journal entry. Purchase account debit 7,200 to cash account 3,240. Why? Because 360 rupees discount is received by you. Discount received is your income, and hence it has been credited. And talking about the remaining half, 3,600, that you haven't paid yet. So with this, Bihari Brothers becomes your creditor. Yes? And hence, Bihari Brothers account has been credited. Yes? So I think we'll end this session here. We have completed transaction up till 12. from illustration 8, and remaining transactions we will complete in next lecture. Let us quickly check what is your homework. Yes, it is of course sum number 7 and illustration 8.